and welcome back to my morning report analysis videos with me, Rich Pro Market Analyst at Hantec Markets. On Wednesday, 5th of December, let's look at dollar yen, which actually fell sharply lower yesterday. Big strong bear candle, and that looked to be changing the outlook with the move below 112.90. To be honest, that's a pretty tenuous pivot line at the best of times anyway, so breaking below that really doesn't really do a great deal for that. But it did hang on to the support at 12.30, which I suppose is the plus point, and it's rebounded a touch today. And you look at the momentum indicators, it's, I mean, neutrally configured in the fact that the RSI cannot get above 60 now, but is not really going below 40. MACD lines edging back towards neutral, and stochastics similar, I suppose you could argue. So ultimately, I think you're sort of looking at this as being probably a more neutrally configured chart now, where you've got these converging trend lines. That is a 6-month uptrend there, but obviously within the scope of that, you've got a 2-month downtrend as well. And I think you're going to get fluctuations within that. Holding on to 12.30 as a basis of support, I suppose, is near-term important, and then you're looking at the sort of 14-figure really area as the resistance. So initial resistance, you could argue, was the breakdown point at 13.20, and you can see that on the hourly chart, this pivot line at 13.20 area, and that is holding as resistance. And the hourly chart again is fairly, it's actually a little bit correctively configured considering the fall over that we've seen in the last few days, but nothing too decisively negative. Although you wouldn't, if you saw dollar yen failing to get back above 13.20, then that sort of again would add to a little bit of corrective pressure again. But it's a chart that is looking a little bit less, certainly less positive than it was, but not really correctively configured quite yet. So I wish you good luck in your trading today, and I'll speak to you later.